accounting for partnership firm. This is our topic. And now we see that what happens when there is a change in constitution of a partnership firm. You know what is a constitution of partnership firm? Constitution of partnership firm means partnership deed, partnership agreement that the partners they do among themselves. So when change happens, this partnership deed needs to be revised. And what type of change cause this issue? These are, number one, admission of a new partner in the firm. Number two, retirement of an existing partner from the firm. And number three is death of a partner. That can happen anytime. No one knows. Okay. So whenever these issue arises, so we change our constitution, we change our partnership deed. And whenever the partnership deed will be changed or the constitution will be changed, you know what will happen? We would need to change those three bases on which we distribute profits. And what are those three bases? Yes, we know very well. First base is the amount of capital contributed would be changed. Earlier, supposedly there were two partners. Now, the third partner has also contributed capital in the business. And now there are three partners who have capital contributed. So the profit will be divided among the three partners based on the interest on capitals. Then might be the third partner who is the incoming partner will be performing more services, would be requiring salary more than the existing partners. And this salary, remember one very important thing, the partner's salary is not an expense to the entity. This is not the salary to manager. And neither this is an expense. This is in fact a reason of distributing profit among the partner. We call it salary, otherwise it is not an expense salary. Remember this thing, very important to do. That this partner's salary is just a reason to distribute profit among the partners. That's why we show it after calculating the profit. Had it been expense, this would have been the part of the operating expenses and then the profit would have been calculated. But since it is not an expense, that's why we work it out after working out the net profit figure. Okay. So in the same way, because of admission of the partner, the profit sharing ratio would be changed. When a partner will be retiring, again, the remaining partner's capital would be there. The remaining partners will be having profit distribution based on their salary. The remaining partners will be having their revised profit sharing ratio. In the same way, when a partner dies, so what happens? The remaining partners, then they share profits. And the person who has died, his balance is then paid to his executors or heirs. So this is how that we see that some changes take place whenever this change in constitution happens or change in partnership deed happens. Okay. So in our upcoming modules, we will work out all these things based on admission, retirement, and death. So the important tip to remember in this module is that a different accounting treatment would be required whenever a change occurs in the constitution for partnership. Okay? Thank you.